I cannot blame you for giving up. It's just the rational thing to do, given that all of crypto is just crashing all the time. But this is not because the long-term holders of Bitcoin suddenly sell. There's actually a silver lining in all of this. This chart over here shows the value days destroyed multiple. So how much do dormant Bitcoin, the inactive Bitcoin, get reactivated? This spikes whenever Bitcoin rallies. So the long-term holders are taking profit. They reactivate their long-term dormant Bitcoin. Now, since Bitcoin has fallen from more than 100K to our current levels, the long-term holders have not sold at all. The value days destroyed metric was just in the green. So it's not the long-term holders that are to blame. It's not the OGs that suddenly sell everything once we hit 100K. Rather the opposite. They are holding tight. But we do have some knock-on effects. For example, Michael Saylor's strategy stopped buying Bitcoin. For the last 2.5 months, there's been pretty much zero purchases by the treasury companies. And that's because the valuation of those treasury companies isn't high enough. For example, here, the MNAV, the market value to net asset value, is at 1.03. It's not really worth it for Michael Saylor to sell common stock to buy more Bitcoin. STRC, so the preferred equity instrument, also does not trade at $100. So it's very unlikely that Michael Saylor will bring us out of this mess. And at the same time, the market continues to cool off. Right, this is the realized HODL ratio. This measures the activity of the long-term holders versus the short-term holders. When the short-term holders are very active, that's when we want to exit, and we want to buy when it's mainly the long-term holders that are responsible for the price discovery. So short to medium term, it does look pretty bleak. The OGs aren't selling, the whales aren't selling into this price. However, there's also no purchases. There's no purchases by the treasury companies, and the market continues to sell off. There's less and less short-term trading, and as long as we see a cooling off, we tend to see declining prices. Now that's the short to medium term. But I do want to talk about the long term as well, because the question is always, does it make sense to buy an asset when nobody else wants to buy it? As in, are the fundamentals intact? Does it make sense to buy Bitcoin for the next 5 or the next 10 years? Or have the fundamentals shifted and now Bitcoin is just outdated technology? There are some glimmers of hope. For example, this is the number of addresses with at least one Bitcoin. This is a nice metric of Bitcoin adoption, right? The more people hold at least one Bitcoin, the broader the ownership is, thus the more sustainable are current prices. Now, we haven't seen this number go up since the end of 2023, but recently things are slightly changing. It's very subtle and not many people are talking about it, but over the last 2 months, this number did start to creep up again. Also, over the years, we do see how more and more Bitcoin is owned by the ETFs. So this continues to be an engine for demand. People that buy Bitcoin via the ETFs are normally not that deep into the crypto space. They simply just want to allocate, similar to how they allocate towards a stock ETF, similar to how they allocate towards gold. They just want to be passive investors. They tend to be long-term holders. And we want to have more and more long-term holders in the space, because as Bitcoin becomes a more popular form of saving, the more value it can accrue and the higher the price can go long term. Now, this increased from 1.2 million to 1.8 million over the span of 2 years. So that means 1.5% of Bitcoin supply gets absorbed via the ETFs every year. So over 10 years, we've got 15% of the supply gone. Over 20 years, 30%. Over the decades, this does accumulate. And again, we are now looking at the long term. We are wondering, is this potentially a good contrarian investment? The profit is always made when we are right, while most other people are wrong. So when we are correct in our contrarian take. So when most people don't want to own an asset, we want to buy it. Now, this doesn't work for every asset, right? Because some assets just go back to zero. That's why we look at this data here, right? We want to find out what are the long-term supply and demand dynamics. The nice thing about Bitcoin is that the supply dynamics are 100% clear and transparent, right? We've got our 0.8% inflation, and that will go down to 0.4% in less than 2 years. So we only have to figure out one side of the equation. For most other markets, we have to figure out both, right? How much gold mining happens, how much property is being built. We don't have to figure that out for Bitcoin, because for Bitcoin, we know how much supply will grow. That makes this market comparatively easier to predict. All we have to focus on is demand. And we already know that 1.5% of Bitcoin supply gets absorbed quite consistently via the ETFs. Here's another interesting chart, and it's a bit complex but extremely useful. This is the HODL waves. This looks at all of Bitcoin supply, so 100%, and then it checks for how long did that Bitcoin not move. So for example, after 10 years, we had some of the Bitcoin that didn't move. As time progresses, more and more of the Bitcoin supply hasn't moved for 10 years. We can then extend that to up to 7 years, or even further to up to 5 years, etc. Now that chart is useful because it gives us an idea of the liquid supply of Bitcoin. If the liquid supply of Bitcoin shrinks, that will of course increase its price. So here's the Bitcoin that has not moved for at least 5 years. This continues to go up almost monotonically. As in, once a Bitcoin hasn't moved for 5 years, it's very unlikely to move in the future, at least in aggregate, when we sum up the Bitcoin that enters that bracket versus exits that bracket. This is a net shrinking force on supply. Now, once we expand this to up to 3 years, the chart looks different, right? When the Bitcoin chart rallies enough, then in aggregate, those kind of holders tend to distribute and increase the liquid supply. But everything that hasn't moved for at least 5 years tends to stay out of the liquid supply, at least in aggregate. So that's another force that will help Bitcoin's price to long-term appreciate, right? When we've got demand by the ETFs and we've got less and less liquid supply, then of course, when the inflation rate is only at 0.8% per annum, and that will even go down in 2 years, that will put a floor on Bitcoin's price. Now, how quickly is this going up? Let's have a look at the last 10 years. So from August 2026 to today, we've got roughly 1.5% per annum. That moves to the diamond hands, or to the people that simply have forgotten their keys. 1.5% through the ETFs, 1.5% through long-term adoption as a savings vehicle. Those kind of dynamics are the reason why the long-term holders don't sell when prices are depressed like this. That's why the value days destroyed metric continues to be low. The OGs know that there will be a new all-time high for Bitcoin at some point. The question is only when will that happen? Of course, the strongest forces of them all is the devaluation of the US dollar. But this helps every asset. Stocks go up because of it. Property goes up because of it. Gold goes up because of it. And of course, Bitcoin also gets supported through that devaluation of fiat currency. On average, fiat currency expands in its supply by 6.8% per annum. So I believe that's the real inflation rate. It's not the CPI, it's the monetary base expansion. The CPI understates how much money devalues because there's technological progress and it becomes easier and easier to produce consumer goods. When we actually look at how quickly is supply growing, it's 6.8%. So that's our hurdle rate for any investment. If we don't make 6.8% per annum on an investment, we are falling behind. But when an asset doesn't grow at that rate in its supply, then it will go up in US dollars. Now, this is Bitcoin's price, very long term on a logarithmic scale, relative to the US money supply. Bitcoin got created as a response to the monetary expansion, right at the height of the global financial crisis when the banks got bailed out and new money was just flooding the system. Bitcoin has this hard cap in supply just to prevent a devaluation of the money. And Bitcoin has succeeded at fighting monetary debasement. Now with every cycle, the marginal outperformance versus the monetary debasement of course goes down. The first cycle gave 8,000% outperformance, then we got a bit over 1,000, then we got a bit over 100%, and the last cycle only gave us 71% outperformance versus the monetary debasement. But if we trust all of those assumptions, so the demand through the ETFs, the shrinking supply through diamond hands and people that lose their keys, and on top of that, the devaluation of the US dollar, then very likely, at least measured in US dollars, we will see a new all-time high at one point. The question is only when. And so whenever we are below the all-time high in Bitcoin. We could regard this just as a discount to give us potential additional return. If a new all-time high is a given, then the lower we fall from that all-time high, the more our at least short to medium term performance expectation should be. Given that we've already fallen more than 50% from the all-time high, we should expect forward-looking performance to be more than 100% from here. 115%. The only question is, when are we going to hit that line again? Again, short term, I'm not too bullish, and I don't blame you if you give up on crypto. The masses simply don't outperform in investing. It's the few contrarian players, it's the long-term holders that hold during bear markets like this, or that are able to manage their risk in a way to not have to sell too aggressively when Bitcoin's price goes down. Let's see if Michael Saylor was smart enough in its leverage with Bitcoin. Short term, the market is still cooling off. The realized hodl ratio is going down. Short-term traders continue to exit the market. This is not yet a market that's just dominated by the long-term holders. But there are first signs that things are turning around. And even more important than that is the long-term trend. The demand through Wall Street, the Bitcoin that will never be recovered in the future, and of course, the fundamental structure of our fiat-based system. That's all in support of Bitcoin. And if Bitcoin doesn't experience any surprise failure, like suddenly bottlenecking because of spam transactions, or let's say a hacking with quantum, if there's no real black swan event, then of course this long-term trend should continue. There is risk with any investment, but the risk today for Bitcoin is not as high than it used to be 1 year ago. The risk to reward is of course much better now. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. Helps the channel grow. Feel free to also check out the premium membership that pops up here on the screen. There is a 7-day money back guarantee in premium. I share my own trades. I share a lot of tutorial videos there as well. There's no risk for you in trying it out. Again, a 7-day money back guarantee. So I'll see you next time. Cheers.